right, good morning, everyone. Today is October 11th, 2023, and I'm back with another edition of the Wednesday live show. And boy, lots going on since last week when we were here. Got tensions in the Middle East flaring up, and that sort of adds a whole nother dynamic to the market, right? As usual, there's always something. And let's see what else is going on this morning. The PPI number came out, and was inflation was a little hotter than expected. Some other numbers got revised, and I believe tomorrow the CPI number comes out, and the big debate now is, is inflation going to tick back up? What's going to happen with oil prices? Because I think that oil prices are kind of in focus because they have the potential of reigniting inflation. And the other thing is the consensus now seems to be amongst most of most of the experts, the consensus seems to be that the Fed is done raising rates. Right, and so it's going to be kind of interesting because Fed meeting's coming up. I believe it's October 31st and November 1st. So I guess the Fed announcement, don't quote me on this because it's still quite a ways away, is November 1st. So a lot going on before that, and so but they I think today the Fed minutes come out at 2, and so that's the big sort of that's the big sort of thing that I believe that the market is mostly concerned about, because obviously, this whole thing over in Israel started over the weekend, and miraculously, the market itself has just had a pretty significant rally off of this support level that we were looking at, right? And so you can see it clear as a bell here. Started on Friday with what looks like a tremendous short squeeze of sorts. Right? Let me zoom in a little bit here. Yeah, it's funny because there's the 200-day moving average, that blue line, and so I mean a lot of people were looking at that thinking, hey, the market's gonna test the 200-day moving average and bounce off of it, this and that, and so if anyone that was waiting for an actual test of the 200-day, like for it to touch it or poke at it and move, back above it, would have sort of missed out because it got really, really close, right? And I've had these support levels drawn on this chart for quite some time, and so it kind of makes sense. I mean, the market came down into an area of support, and then it bounced off of it, and it was a pretty significant and violent rally. I mean, especially based on the ranges of all these prior days prior to Friday. And so it kind of seems like Friday was once the momentum got rolling to the upside, I think it was a lot of short covering and maybe longs piling in and that, because it was pretty amazing. And literally the high was like right up against this trend line, I guess what you would call support and resistance, because at one point I had drawn it up across this low. It had a little angle to it, but I decided just to make it a horizontal line. And it's kind of interesting to see, how this stuff works, that I see it all the time. I see, different little things where standard, and I talk about this all the time, just like textbook technical analysis type of moves that play out. And it's just amazing because at this point in time, so many people, follow the same stuff, the same standard textbook technical analysis that I guess, is kind of has been working since the beginning of time. And it's just interesting because, you got to be kind of skeptical these days, because you would think that there'd be like fake. I suppose, I see a lot of fake outs, especially on intraday charts and different things, but I see tons of fake outs. I suppose you could say this was a little fake out that the price came so close to touching the 200-day and then bounced off of it. But the thing of it is, the 200-day moving average is not the greatest guide in the world usually, because look over here. You had moves above and below the 200-day and below it and back above it and just slicing all around it. And so, but as you recall, last a year ago in August, we had that big run up that literally tagged the 200-day and then reversed, which what I'm talking about when I talk about, textbook sort of technical analysis moves. But anyway, as it sits right now, with everything going on in the world, usually what you would expect, what I would expect, what a rational thinking person would expect is that, this whole war and, war, Israel at war thing would be one of these things that would spook the market, right? And so, but, over the years we've seen a lot of instances where the opposite of what makes sense is what happens. So what I want to do at this point is, and I believe that at some point I had drawn, let me see if I can get this on here, because this kind of it makes sense right now to draw this sort of overhead resistance line here, and just to see, what it looks like, because the market is kind of squeezing into like this sort of triangle there, so it makes sense. Well, I might as well save that. I think I've drawn that before and didn't save it, so kind of makes sense to have this overhead resistance line. And let's zoom this chart back out so that we can get the big picture. One of the things when you're looking at the big picture is you got to go back to, well, usually I go back to the pandemic, but it's getting to the point now where, hey, you almost got to pull up a weekly chart for that. But I like to go back to the beginning of 2022 because that shows the all-time high, right? So it's kind of an interesting pattern. There was a little undershoot of this trend line. Like this trend line got broken, and then the market managed to hold that 200-day and squeeze back up or whatever. So it's going to be interesting to see. The thing of it is that textbook technical analysis would say that this major trend line, and of course I could probably, there's ways of redrawing this trend line where it wouldn't actually be broken, right? Like if I put this on a candlestick chart and drew it from here to to down here, maybe it held. Maybe my trend line is just I might do that. I've got a candlestick chart of the same thing, but I won't do it this minute. Anyway, it is what it is. Thing about trend lines is they tend to, well, like I said, the whole fake out thing. Here's something kind of interesting. Let me see if I can pull this up here without screwing up my chart too much. I'll have to remember to push it back down, but yeah, if you look at the RSI, you look at the RSI and zoom back in here. RSI got pretty oversold here, like right around this sell-off. And of course, you guys remember, way back here when it was overbought, we talked about it a little bit, and then that was kind of, especially over here, was kind of the peak of this whole thing, and a lot of time's gone by. It's been a few months, and the market's kind of sold off, over the past few months. It made a lower low, so it's made a couple of lower highs and a lower low, and so even if but it was extremely oversold, and of course the sentiment was extremely negative too, right? I think the CNN Fear and Greed Index, I saw some people post that, was in extreme fear, and it really felt like this few week period right here from that kind of started with this move down and then this gap down and that. It kind of felt like every morning, the market would try and rally and it would just get turned back, right? There was a lot of days like that where the market, just felt like there was sellers. You could just see it. You could just see it in the price action of my little trend lines. My little trend line's kind of discombobulated here. I see as I zoom in here a little bit. Well, let's see. I'm trying to fix it. That's what I'm trying to do. Get it a little more accurate, maybe extend it out a little bit. So I mean that's another area of overhead resistance before and of course there's a lot of overhead resistance right now. So there's the 50-day moving average. I mean, we just had a really big move off the lows, and so some backing and filling might be probably be healthy. The market, back in the day, you would see a lot of moves that were kind of backing and filling. That's where you get sort of an area that the market can move off of. What am I trying to say here? So when you get like these really big moves, like in a straight line where it just keeps going and going and going, there's really less there's less volume traded at those levels and that type of thing. So it seems like the market could use some congestion, like right around this area. Kind of like this, I suppose, or this. I mean, this is actually a great example right here, back in June, where you had the market kind of rallied up and then spent a few days just sort of consolidating that move. Just beautiful. Like, I don't even know if you call that a flag, like, a high, tight flag or whatever, but the market had to move up, and then you had, these 4 days here where it just kind of traded in a narrow range, and then you got another leg up. And so it'll be interesting to see what happens from here. Overhead resistance, at the downward sloping 50, possibly, just because sometimes these moving averages, like back over here, the 50-day moving average was kind of looking like support. You had some pokes down, but you never broke below it. But then you get these periods where the market just zigzags and slices all around it. So no moving average is perfect. And I think sometimes people tend to overthink them, but it seems to me that this 50-day coming down and this big round number of 4,400, although interestingly enough, there's that gap right there. I was looking at this gap on the SPY chart too, because the SPY gives a little bit better of an indication of what the market did, in my opinion, than SPX, especially as far as the opens go. But anyway, there's that gap there that today market's kind of weak because of this PPI number, and back to the whole thing where I keep seeing all of these people saying that the Fed is done hiking rates, and yet, and even some of the Fed members are hinting at that. But of course, they're always data dependent, and tomorrow's CPI number is gonna matter a lot because first you got today's number came in hotter than expected. Which, quite frankly, I mean, at first the market kind of sold off on that, and then somehow or other it managed to rally back up. But it seems to me that the potential for a second round of inflation or a third round. I've been reading people talking about, are we expecting a third round of inflation? Anyway, the problem with inflation is that even when inflation comes down, the price of everything's gonna stay high. We've talked about that many times, but anyway, here's something interesting, and I'm seeing a lot of people noticing that something else that we talked about is that this is the equal weight S&P. And so what everybody is saying is that 90% of this year's rally is 7 stocks, the Magnificent Seven, they're calling them now. And so this shows you what the S&P would look like if, all 500 stocks were weighted equally. Significantly different looking chart, right? And I mean significantly down from that last peak there. Think about that. Think about where I have that resistance area drawn, up here or whatever. So that's a whole different look to it, right? Especially lately, because the sell down that we've had over the past month or so, significantly weaker. And this thing is, the equal weighted S&P is just barely up year to date. So that's kind of interesting. As we speak, the market is kind of selling off here. Let me zoom in on this and just kind of, because this is pretty interesting. I mean, yeah, you got the Magnificent Seven. You got Apple, Amazon, Microsoft, Google, Tesla. Well, that's 5 of them. What am I missing? Nvidia. um, and so, yeah, 7 stocks holding up the S&P as opposed to this is kind of an interesting idea. Not a healthy market necessarily. And then of course, you got the same thing with the Nasdaq 100, the tech stocks, right? Whoops, what happened there? These charts are a little wonky, but I still like them. I mean, these are so much easier to work with than the standard stock charts. But anyway, yeah, the Qs here have sort of this cup and handle look to them, right? We talked about this before too, quite a few times, in the bigger picture of the whole market going back to the highs, kind of has sort of a big giant cup and handle look to it. And different ways to draw this. I mean, you draw it parallel or put it across these, but I mean, it's just sort of the same concept. Is if I didn't know, what this was, if this was just, some random stock or whatever, I mean, it certainly looks like, a big gigantic kind of convoluted cup and handle though. So let me switch that to a weekly and see what it looks like there. Well, like I said, these charts are a little wonky. If you grab them in the wrong place and move it, yeah, it kind of looks like it wants to resolve to the upside. But one of the funny things is that every time I turn around, what I see is something that looks like this, right? I mean, so many stocks have this look to them. A lot of growth stocks, momentum stocks, that type of thing that just went crazy back, after the pandemic. They look like this. And so, I mean, what this looks like is like this looks like the dot-com bubble that bursted. Look at this. I mean, Square. There's just tons and tons of these. A lot of those stocks I don't even look at anymore. But some of the IPOs too. Do you remember how much hype surrounded Robinhood when it went public? And this was some sort of insane anomaly here, right? Like the second week of trading or whatever. I mean, if you almost have to ignore that, but still, I mean, what a disaster. So, yeah, as I look through tons and tons of charts, what I see is, and going back to the equal weighted S&P. Now, this is a pretty good look here. Equal weighted S&P. I mean, there was the bear market that ended, last October, a year ago. It's been a year ago since the lows, like almost to the week, right? Like a year ago. But the equal weighted S&P is not all that impressive, which is kind of a warning sign, I suppose. They talk about back in the 70s, they had something called the Nifty 50, right? And it was 50 stocks that everybody owned, and everyone piled into in that, which eventually turned out to be a disaster, right? And so nowadays, having seven stocks that represent, like, the bulk of the gains in the market has got to be worse. Let's look at the Russell. Um, the Russell's even bleaker. I mean, the only positive thing that you can say about the Russell is it's coming down into like major support levels, right? Um, so let's see, somewhere. Let me go back to a daily chart. Let me find my IWM chart that's marked up, because I haven't actually looked at the Russell for about a week here, but look at that. Um, yeah, it's kind of nasty, right? Same sort of thing with the trend line. I just drew a trend line across all the lows, and it broke through it and came back above it. But boy, look at how the 50-day and the 200-day are just kind of like an oscillator here. Anyway, here's one of those examples of where the sort of textbook technical analysis, the last time we were running up into this um, resistance area, where it just kind of worked like a charm, right? So this is a pretty nasty chart, to be honest with you. The main thing it's got going for it is the fact that I might as well just change that to sort of a big support level there. That's the one thing that the Russell's got going is that it just tested like an area that's typically just under 170 that's been support here. And I mean, there has not been a lot of time spent below this line. I mean, you can see that I'm kind of looking at this area right here as like sort of the main, and that, this was the end of the year last year. Spent a lot of time just sort of bouncing right around there. And so, it found support again this time around. Be interesting to see what it does from here. I guess earlier in the year, it spent a whole lot of time between 170 and 180. I mean, that's a long period of time. Zoom back out here. Interestingly enough, the Russell, made this high before the rest of the market did, but this is kind of ugly, because the Russell 2000, 2000 small cap stocks, it just shows how out of favor they are. Um, you figure you got the S&P 500, and you got seven stocks in the S&P 500 that are holding everything up and accounting for the majority of the performance, and then you got these 2,000 small stocks that are just, they're doing terrible. Go all the way back to You got to go all the way back to, like, well, I guess this is winter time of 2020 is where we're trading at now. And so all that time's gone by. And then, of course, the thing that nobody talks about is how inflation plays into this, right? I mean, if you think about the inflation that we've seen since back here, since the end of 2020 all the way to now, and even still, the S&P adjusted for inflation. I think I mentioned this last week. The S&P adjusted for inflation needs to hit about 5,300 in order to actually make an inflation adjusted high. So let's see, somewhere on here. Nope, I probably should have saved that. Someone on here. Here we go. I got a weekly chart of the S&P with some other lines drawn on it. All right, this is kind of an interesting look too. This is actually a pretty interesting sort of look at the S&P, because this goes back to, there's the pandemic sell-off, right? And recall that the S&P lost 35% from high to low in 4 or 5 weeks, just a few weeks. That was one heck of a bear market. And then, of course, the Fed slashed rates to zero and created about roughly $6 trillion, printed about $6 trillion out of thin air. as the result of the pandemic. That was their pandemic response, which in turn caused the market to just, rip higher. It created that bubble that, like we looked at on ARK there in the momentum stocks. And it also resulted in the inflation that we've seen since then. And so, I mean, that's a real simple explanation of what happened. And at the time, back over here, the Fed kept saying, "Oh, well, we don't expect, we don't expect." They didn't actually say this, but this is what they inferred, is that they didn't expect creating, $6 trillion out of thin air, to keep the economy, held up during the pandemic was going to result in inflation, right? And then, of course, they blamed it on supply chains and different things and all this and that. But, fact of the matter is, obviously, no one would have known how it would have played out had they not done that. But it's just kind of funny because, we talk about this all the time. Inflation is the direct result of governments creating money out of thin air and watering down the existing money supply, right? So they caused the problem, and now they've gone on the fastest rate hiking cycle in history, I believe, or one of them, and of course, that takes a lot of time to filter through the economy. And so, I talked about this last week. Everything's so subjective these days. Whether the economy's strong, certain numbers, say it's strong, and then you look under the surface and the numbers are misleading. And so, back in the old days, I mean, data was data. You would think nowadays, and these last payroll numbers were also very misleading because you had some numbers came out that pointed to slowing job growth or this and that. And so, I mean, all the numbers are debatable these days. Man, as long as I've been doing this, they've changed the way that they calculate inflation. Like I remember when they changed it the first time years ago. And then, they've gone and changed it multiple times to, to sort of massage the data so that inflation doesn't look as bad as it is. Meanwhile, you go to the grocery store and, I mean, everybody knows that the prices of stuff, a lot of stuff, have practically doubled over the years. I noticed one particular thing at the grocery store that I haven't bought in a long time. Years ago, I used to buy it, and I hadn't really bought it in a long time. And then I was at the grocery store about a week ago, and I noticed that the price is like literally it was 2 something, and now it's 4 something. And so, and just by principle, I'm just see that's it. That's the crazy thing about the price of groceries is that the change is such a small amount. Something goes from 229 to 249, and then it's 289, then it's 329, then it's 349, and all these little incremental. I mean, they're huge percentages, but incrementally, you figure, wow, what's 50 cents, right? And then, but it adds up over time, and people struggle. So, and now, I hadn't even talked about mortgage rates being 8%. So, it's like they didn't learn anything from the housing bubble that burst in 2008. And here, we find ourselves in the same sort of situation where, at 8% interest rates, compared to, most of the people that locked them in at like 2 or 3, 2 something, 3 something, housing has become unaffordable. And so there's a lot going on with that I'm not going to get into. But anyway, here's the bigger picture on the S&P. It's kind of miraculous that it was able to rally, so far back up towards the highs there, and it is what it is. And so whether this trend line gets tested, if this trend line gets I mean, if it comes down here and tests this trend line, that's going to be super interesting. Another thing to consider is that as we speak here, there we go. This line right here is 2024. Whoop. I was looking at my chart and not the screen here. So, the fourth quarter tends to be the strongest quarter of the year, right? And over the years, especially as we get towards, November and December and the whole Santa Claus rally thing and all that, the funny thing is that you'll start hearing talk about the Santa Claus rally probably as soon as we get to November, right? And and I mean, Santa Claus rally this and that, and they talk about it. And what very few people talk about is, and somebody will mention it eventually, is that the Santa Claus rally is like the week between Christmas and into New Year, right? It's like by the definition of it, it doesn't come before Christmas, it's after Christmas. So anyway, interesting stuff, but this is the bigger picture, and quite frankly, I mean, earnings season's just now kicking off, and so that's going to be. I've also heard people say that the only thing that matters right now is earnings, and so it's going to be interesting to see how earnings season plays out. But as far as like the real big picture here, market's kind of in no man's land, right? There's resistance up here, there's support down here. Big major trend line. This could be drawn a couple of different ways. I suppose, if for some reason the market's sold off, but seasonally speaking, this is a strong time of the year, and so quite frankly, I wouldn't even hazard a guess. I saw the Goldman Sachs main guy on CNBC yesterday, and his year-end price target for the S&P is 4,500, right? So he thinks that, let me zoom this out a little bit here. December, there we go, 2024. Yeah, I guess there we go. Funny thing about Goldman is they always like to have a price target that's like really close, sort of close to where we are. So, I mean, 4,500 that's kind of an interesting price target because what? I mean, the market's gonna, spend the rest of the year zigzagging around and then end up, right there. I suppose that's a pretty safe price target, I guess you could say. And so, yeah, the funny thing about Goldman is, where was it? Somewhere I just remember them. Oh, I guess it was this time last year. This time last year, the market was trading at right around 3,600, right? And Goldman lowered their year-end price target to 3,600, and I kind of laughed. It gave me a chuckle because it's just kind of funny to take the current price and whatever. I don't even remember what their price target was prior to that, but I mean, it was probably significantly higher. But hey, that would be like me saying, well, my year-end price target right now is 4,400. So anyway, we're all, as Powell would say, we're all navigating by the stars under cloudy skies, right? So there's a lot going on, and there's headline risk right now. That's the thing that makes me the most nervous, I suppose, because you got all this tension in the Middle East, and so that has the potential to escalate, or it has the potential to be forgotten about. It's kind of like the war in Ukraine. I mean, you hear about it all the time, this and that, and but it's not like the market's not moving based on every single headline. But it's a pretty sad situation, in this day and age, that there's still all this war going on the planet. So, but anyway, I guess if somehow or other it escalates and we get involved in it, then but then again, there's the whole idea that the opposite of what you would think happens a lot, especially when it comes to geopolitical stuff. I've seen that so many times over the years where, you think that these geopolitical events would cause the market to sell off and it rallies. And so maybe, hey, maybe there's something to all this technical analysis. But anyway, I'm gonna wrap it up here, and we will just sort of we'll see how things play out between here and next week. So I'll see you back same time, same place.